Hey gang, Matt from Easy Breakouts, about to start another current market trend review, but before I do, just wanted to mention that if you find this video helpful, be sure to click on that subscribe button down below. Also, you can view additional videos by visiting our YouTube channel. Alright, let's hop into our analysis. So folks, across the board, as you can tell from the S&Ps, the Dow, the Nasdaq, and the Russell, pretty much a flat day from the equity standpoint. It was just backing and filling. An early morning sell-off led to a later afternoon rally back. We had the crude actually coming off just a little bit on oil inventories today. Gold found a nice pop alongside of the bond. So it seems like basically the two asset classes that have sold off post election here, seeming to maybe find a little bit of a bottom here over the last couple of days. We'll take a look at all of these on the charts, but as always, we're going to start off with the S&P 500s on the daily. So folks, as we come into the end of the year, trade has definitely slowed down. You can see that evident here in the volume, just pointing downwards, as a lot of traders are out on vacation at this point. We should expect this to start picking up at the beginning of 2017. That first couple of weeks of trade should start picking back up. But folks, at this point, we're sitting on some critical levels that I pointed out from prior market direction reviews, and that would be the 2050s, 2050 on the S&P 500s. But really, the place that I'm looking for the markets to hold over the next week or 2 weeks going into 2017 is definitely the 2215s. That's the place that we staged that prior breakout that should hold the next time we come down to test those levels. If it does not, that potentially points to a bit of an issue with the conviction of the buyers at a prior level where buyers were willing to bid up the prices of the S&P 500 here. So that's the place I'd be looking for. Also to the upside, just kind of zooming in here, we basically formed a little bit of a balance, and so this is why I'm focusing right in on these 2250s. So if over the next couple of days you find yourself back above this level, definitely that's going to be an attack on the 2300 whole number. But if you start to fade down, the main thing that I'm looking for the markets again to hold are these 2215s. Switching up to the Nasdaq here, let's take a look at the Nasdaq on a daily. So the Nasdaq actually tried to post up into new all-time highs. Actually did so last week, then kind of got rejected back down below it. Now sitting right back at some critical levels. So we can see this here on the intraday chart. So here's that balance we were forming, and I was pointing this out on prior market direction reviews. And we tried to make an attempt up and over the 5500 whole number, got rejected, hit a wall of selling, and then here we are right back on the lower end of the balance. So at this point, again, one of the areas I'm looking for the Nasdaq to hold is 5400, and you can see here on the charts why that is. One, it's a whole number. Two, it's been a prior area of support, and three, it's a prior area of resistance. So as we kind of back and fill over the next few days, or maybe even a week or two, you want to see this 5400 hold. Otherwise, the breakout above this level that we posted 2 weeks ago is going to start to feel a little bit suspicious, right? The buyers are not supporting it above a place that they broke it out of just 2 weeks ago. So that's something to watch on the Nasdaq. Also, another thing that I'm just noticing here, like some of the bigger cap tech names like an Amazon, Facebook, still having some issues with their 50-day average. In fact, Amazon having a little bit of like a reversal day right on that 50-day average just a few days ago. Facebook is another one having some issues, actually even staying above the 200-day average. So again, as we look at these are signs that these stocks are just not the leaders anymore. If they go down or up from here, who knows, but definitely by the looks of this relative strength line, that blue wavy line, by the actual rating, we can just tell that these are no longer top performing stocks. Remember, we want to stick with ratings 95 or higher ideally. That means you're outperforming 95% of all other stocks out there. So at a 37% rating here, a lot of these bigger cap tech stocks definitely lagging behind some of the newer leaders, the financials, and the infrastructure stocks. As we move over to the gold charts here, let's take a look at the GCs. So gold, I'm taking a look at this on an intraday chart, and one of the things I was noticing here, after the Fed rate hike announcement, we actually had a little bit of a further sell-off all the way down into the 1120s, and then what you notice is you actually form a little bit of back and forth trading. That's what we call a balance. Whenever you reach that area where no new lows or no new highs are hit, that's a balance. And what we were looking for earlier in the day today was the 1150s. That actually broke out on the very first opening ticks here in Thursday's trade. So that rallied up and now we're at the 1160. So if we zoom out of this here, let's take a look at a bigger time frame chart. Again, there's quite a bit of selling that has happened in the gold. I'd be looking for any potential snapback rally to be challenged here at the 1200s. 1200s, if you remember, if you recall, let's take this, zoom it out even further. 1200s was a prior area of support that gave way, so any sort of snapback rally, I wouldn't surprise to see some sellers start coming in right around those 1200s. That's going to be the first major test of any sort of recovery here in the gold. Taking a look at the bonds, it's interesting to see how the bonds rallied off of these levels, the 123 evens. These are the 10-year futures. Again, we are looking at those levels because those point to support levels. Let's see, we have to take this all the way back out here. These point to levels that we haven't seen since like the 2012 and 13 era. So that's the 123 evens. Noticing after a really long protracted sell-off, finding a little bit of support, bouncing here right off that line here. Okay, finding a little bit of support. We'll see as we balance out over the next couple of days and weeks how this plays out as this matures. But folks, at the moment, kind of finding some support right there in the 10 years. And then finally, taking a look at the crude chart. So crude rallying all the way up to the 54s here. Again, a surprise build on the inventories, kind of pushing the crude back. But as I've mentioned to our trading room, with the crude pushing up towards the 54s, it does seem that there's a underlying bid in the crude contract, which points positively to the potential that this bottoming process on a weekly chart is on its way to starting to break out, potentially towards the mid 70s. Again, that's something that probably will take several weeks or even several months to play out at this point. So folks, as we kind of wrap up the analysis, again, not a lot of things to point out on the equity side. One of the things I did want to mention is over this holiday break here, a lot of our positions just stopped us out. So we're just waiting in cash, just waiting for setups to appear. One of the things I did notice is a lot of the stocks that did have some pretty big run-ups, like for example the steel stocks here, right? Huge run-ups since the post-election results here. Well, now these are about 3.5, 4 weeks into potential base building process. Like potentially you could have some flat bases starting to form. So if you think about like what a flat base needs in order to form, that kind of puts us at a time frame of maybe the first or second week of January. We might see a whole new fresh crop of breakouts from these initial leaders that were running off of the post-election results. So folks, just keep an eye out. Even though the markets are quiet, it doesn't mean we disengage. It doesn't mean we tune out. We just keep tracking, keep building our watch list, watching for breakouts on stocks with high relative strength that are breaking out of recognizable chart patterns. But other than that, wishing everyone a great trading day ahead, a great rest of your 2016, and folks, join us here back for the next market trend review. Hey, by the way, if you haven't done so already and you're liking the analysis, go ahead and hit that subscribe button down below. And as a reminder, you can also view additional videos by visiting our YouTube channel. Or if you'd like to find out more about Easy Breakouts, go ahead and click that Show More right above the comments section to find out more about Easy Breakouts. But other than that, have a great trading day ahead, and may the trend be with you. Take care, everyone.